You're watching this Forex Preview video here at XM.com. Thanks for joining us. I'm Cristina Marujos. So with me today is Cristina Barcenido, investment analyst, and we'll be looking at Chinese manufacturing PMIs for April out on Thursday. Now, Cristina, we saw last month's PMI reading beat expectations and pose a remarkable rebound. Given the fact that in April further lockdowns and restrictions were lifted, do you think we'll be getting an equally positive manufacturing PMI reading for April as well?
Nice to hear you, Christina. Well, as you said, the Chinese government further relaxed its restrictions earlier this month because of the few infection cases they have per day, allowing more companies, especially the medium and small size firms, to open, as well as people to use public transport. So I can't exclude the case of another rapid number. However, looking at the forecast, those are currently suggesting a slightly weaker reading of 51, and to some degree, I could justify this result as an outcome of businesses starting to realize rising costs and falling profits as the export-oriented China can make a real business if consumers in the rest of the world remain isolated. That could also push the unemployment rate higher in the coming months if companies decide to cut the number of workers to reduce losses. So overall, although production is back, we are still well below normal levels, and unless experiments succeed in the health sector in finding the cure for the virus, the process to return to pre-virus conditions could be gradual, and that could consequently keep the business outlook depressed, at least in the near term.
Turning to currencies now, the Antibodians are quite sensitive to Chinese figures, given how closely correlated they are with China regarding trade. Do you think a positive manufacturing PMI could boost the Australian and New Zealand dollars this week?
Well, I think markets are thirsty for some good news. So if Chinese PMIs remain in the expansionary zone, the Aussie and the Kiwi could secure some support given the close relations between those countries and China. But regarding China's economic performance and its impact on the antibodians in the rest of the year and probably next year, I would keep some caution in that because capacity for stimulus in China seems more limited than it was in the 2008 global financial crisis, which is reasonable given the massive domestic debt that has been accumulated over the past decade after the delivery of a huge stimulus package in the previous global crisis. Of course, both the government and the central bank have already provided financial aid to the economy by reducing interest rates, cutting taxes, and increasing subsidies. But the size of the economic support in China is not considered significant compared to what other countries have done so far. And the fact that those actions have been taken after other major economies such as the US and Europe announced their own emergency measures shows that the central bank and the government have their hands somewhat tied. Besides, we shouldn't forget that after the virus crisis ends, China should return attention back to the trade war with the US, so it may leave some room for stimulus for later if trade tensions resume.
Cristina, thank you so much for joining me today, and thank you for watching this Forex Preview here at XM.com.